All right, welcome everybody. My name is Boris. I'm back once again for another new edition of this podcast. Today, once again, I won't be talking about crypto. I'll be interviewing my very great friend, William. So William has a very esteemed background in international development, having made a profound impact on communities across the globe. And recently, he's channeled his passion towards the world of cryptocurrency and trading. While he's still in the exploratory phase of trading, he's incredibly passionate about understanding the nuances of the digital asset landscape. And so I'm very eager to have this conversation with him. So, William, welcome to the show. How are you doing today?
I'm good, thank you. Hi, Boris. Hello, everybody. Nice to meet you all. And, I'm excited to be here. As Boris said, I previously worked in international development across the world. And as part of that, I have seen some of the realities of people that just don't have access to financial assets and financial security and the impact that has on people's lives. And that's one of the reasons that I actually think blockchain technology and things like DeFi can, in the fullness of time, help to revolutionize banking and financial sector to allow people from quite marginalized backgrounds to actually have access to far more financial services than they do today. That was one of the main reasons that I became interested in it. And that's what drew me down this path to kind of exploring it.
Yeah, it's awesome. And so what I really wanted to discuss first is that, I met you about a year ago. It's going to be October when this recording airs, but I believe we met back in November of 2022, and this was maybe a few days or maybe a week after the FTX bankruptcy or the FTX collapse. I just wanted to get your thoughts on how do you think the FTX collapse has impacted the cryptocurrency industry, if at all?
Yeah, I mean, I think the impact is undeniable. It's been huge. I don't think it's entirely fair to say that the 2021 crash happened because of it, but I think the severity of it was definitely increased because of the FTX collapse. When things started to go south and the ridiculous stacking of cards that they did made the crash far worse, and I know it personally affected you and many, many other people. I was quite fortunate because I happened to miss it. I wasn't on FTX. I wasn't involved in it at all. So I was fortunate in that sense, but I know a significant number of people that were affected heavily by it. And it was messed up. I mean, it's an awful thing to have happened. And I think it's really, really damaged the whole scene and the credibility as well, because crypto keeps on doing the same thing where we have these big visionaries come in and we think, oh, this is going to be the person that leads the field. And then they end up being an asshole and they, maybe I shouldn't swear, but they end up, being basically a thief and they take people's money and they mess it up. And we don't do this in central finance, right? When's the last time, I don't even know who the CEO of Morgan Stanley is or any big bank, right? But in crypto, because it's still an evolving space, we don't have this level of institution. We just end up having these visionaries that are supposed to be able to take us to new places. And then they turn out to not be able to take us to new places at all. And I think the space really needs to mature in that sense and get past this idea of, an individual-led.
No, yeah, definitely agree with you. I'm just curious, what are your thoughts on, a lot of people have been debating, is Sam Bankman-Fried or SBF the CEO of the now bankrupt FTX? Do you think he'll be doing a lot of prison time? Is he going to jail for life? Or do you think he'll, what are your thoughts given your experience in international affairs? How do you think this will all go down? Because he screwed over not just investors in the US, but investors all across the globe. So do you think perhaps his punishment will be more severe than if he only defrauded people within the US? What is your opinion on that?
I mean, I don't think my previous work at least doesn't directly relate to it. But if you wanted my opinion, it would surprise me if once the US has finished its legal proceedings, he doesn't face some jail time. I'm not an expert. I haven't been following the case, but it would seem unjust if he didn't face some jail time, considering everything that's happened. And the idea of other countries not being interested in prosecuting him afterwards also seems unlikely, shall we say. I think, especially with the FTC being the way it is at the moment, there's very clearly an interest in going after crypto criminals, which
Yeah, for
he
sure.
appears to be. Of course, who knows? But he certainly appears to be. Only
Yeah.
guilty when he's charged, but yeah, only guilty when he's found guilty. But it certainly appears that way, on the surface at least.
Yeah, based on all the evidence that has been released to the public, it does seem he definitely knew what was happening. And yeah, I think his defenses that he put up on like Twitter or YouTube before he got arrested, I don't think they'll add up in court. But once again, I'm not a legal expert, just like you. Just my opinion.
Yeah, indeed. Yeah.
But anyway, let's get away from this and let's just talk more about your experience within trading within crypto. Can you tell us how did you get into crypto and trading, and specifically cryptocurrency trading? Like, how did you get into this industry?
Sure. So I think initially my interest, I first heard a bit about Bitcoin 2013 or something, a long time ago. And much like I think many people, I let it pass me by. I think I bought like $10 or $20 worth years and years ago and ignored it. And now it's worth, £300 or something because it has grown a lot. But I didn't make generational money like some people did. But then the first thing I really got me into DeFi, especially and into trading, was actually a YouTuber. And he was talking about Strong Coin and Strong Block. And I, got into that. I thought, oh, what a fantastic idea. Turned out wasn't such a fantastic idea. It ended up collapsing pretty quickly as well. And in terms of advice for anybody that's coming into the space, I would definitely say be very, very careful about what you put your money in, and understand that all the hype and the marketing that goes into these things, they are just that. And unless there's a real product there, things may not necessarily evolve in the way you want it to, and you may not make money. So Don't overinvest in any one project. That would really be my advice, because I think when I first got into it, it was Strong Block, and I thought it was a wonderful idea. I thought it was going to change things and be revolutionary. I overinvested, as I think many people do when they first get into the space, and it ended up hurting me a bit. And then people may or may not be familiar with Time Wonderland and everything that happened there. And, it was this complex DeFi thing that basically gave you a truly ridiculous amount of APR. And I made a bit of money off that, but then it came out that one of the founders happened to have been convicted for fraud or involved in some kind of fraud in a Canadian Bitcoin exchange. I believe it was that anyway. And there's a whole Netflix show about it. I don't remember the name of it now, but yeah. So this is the problem with the space. There's so much opportunity for scams to come in and for bad actors to come in. And yet, as a concept and as a mechanism for distributing wealth and accessing financial services, it has so much potential. So it needs to be better managed. And for me, at least, I know I'm going off topic here, I just think there needs to be better regulation. I'm not averse to regulation of the crypto space. I think it's actually a good thing, and it will make it stronger. We need to have rules and regulations around it, because if we don't, things will keep on happening, and it will keep on being seen by the majority of the world as this dangerous, scammy place where you're going to lose money. And I don't think that's fair. I think it can be a revolutionary power for good, but we do need more rules.
So speaking of regulations, recently we've had the SEC come out with their lawsuits against Coinbase and Binance, which is the largest cryptocurrency exchange in the world, which happened back in June. So what are your thoughts on the regulatory landscape within the US? In my opinion, I think it's a bit too harsh compared to other countries around the globe. I'm sure I'm a US citizen, and for me, I cannot register on a futures exchange like Binance or Bybit or there are so many out there now, but I can't. It's illegal leveraged futures trading on crypto. There's some very strict regulations if you're a US citizen, but I know you're from England, obviously.
I am, yeah.
So for you, it's not a problem to register on Bybit.
We also have restrictions. As a British citizen, I also have restrictions on what I can and can't do, and you have to meet certain criteria in order to be able to do these things.
Okay.
And I think that the way that it's going in the US, I mean, again, I'm not an expert, but my concern with it is that it's not going to stop the people that want to access it accessing it, because there are very easy ways to do it. You get a VPN, you form an account on one of the other alternative exchanges, and they will happily take your money relatively anonymously and allow you to, do whatever you want to do, trade, etc. So it's, I mean, if I could use an analogy, it's a little bit like the prohibition against alcohol back in the 1920s. This idea that you can control it, you can stop it, you can gain, no, doesn't work. If people want to access it, they will access it. So would I do what they're doing if I was in charge? Certainly not. I would create regulations and structures around it, but I wouldn't try and stop people from doing the things that they want to do, because ultimately they will find a way. And rather than stopping them, I would try to put in better protections to allow them to be operating in a safer space, to make the space a little bit more transparent, a little bit more open, and a little bit more friendly towards the beginner users. Because realistically, crypto is not going to disappear overnight. And by putting a lot of regulations to stopping US citizens and other citizens from doing these things, you're not going to prevent them from doing it. You're just going to create the need for them to use loopholes to get around the systems. And that is, in my opinion, completely counterproductive to creating a good regulatory structure around how crypto works.
Right. This is a really good discussion. I'm going to get a bit off track here, but I like where we're going with this. So I guess my question for you was, do you think that world governments would view cryptocurrencies such as Bitcoin and Ethereum as a threat to their own, I guess, centralized currencies such as the US dollar or China's yuan or even the Japanese yen? Do you think that, do you think it's a threat to the global monetary system that we've had in place for, since the beginning of time, basically?
So I think in my opinion, I wouldn't regard it as, I don't think people see it as a threat. I think they see it as an opportunity for assets to be hidden effectively from tax people and from tax collectors. And that is possibly where it becomes the biggest threat. But in terms of the sheer amount of money in crypto trading compared to real term assets or real world assets, it's just not comparable. It's like 1 or 2% of the entire world's wealth. It's not that great. I don't think it's a threat in that sense, but I think what it could do and what I would like to see is it actually offering a new model for the way that we manage centralized currencies. Because at the moment we have this system where it's, you and I as an average citizen, we can go on to, say, the Central Bank of England, and we can see, okay, they're raising interest rates, they're printing pounds or printing dollars, or whatever happens to be in which currency. But there's no real way for you or I to track where that money goes. It's completely impossible for us to do it as ordinary citizens. But if it was done in a similar way that the blockchain is managed, you could, as an ordinary citizen or as an economist or as anybody, go and actually see where the money is going. Okay, this $1 million was printed and it was given to this bank, and this bank then lent it out to that. You can actually start to trace the way that the money is going. And I feel that would create a lot more transparency in the world and allow economists and world leaders and everybody essentially to understand more of where assets in the world are moving. And I think that itself would be a real benefit to how world leaders could actually plan out and understand how to budget future actions. Because again, you go back to the 2008 financial crisis, vast amounts of money were printed and given to banks in order to bail them out. I have no understanding of where that money's gone, and I have no understanding of where to even go to find out where that money's gone. And I bet the average person doesn't. Now, if this was all done in a similar system to blockchain, even though I wouldn't necessarily know how to do it myself, I'd know where to go. And I'd know the skill to learn. You can see the transactions, you can read the codes. So in that sense, I do regard it as a bit of a threat, because to me, the technology itself seems to be almost an evolution of where the financial system should go. And at some point over the next 50 years, maybe 20 years, I do believe that most centralized currencies will be managed in a similar way to the way the blockchain currently works. They'll have their own blockchain structure because it just makes things more efficient and effective than the current traditional system. It doesn't work very well. If you've ever transferred money halfway across the world, which I've done an unfortunate amount of times, it can take sometimes 3 days to wire funds from one account to another. Doing it in the world of blockchain, it takes maybe 10 minutes, maybe 20 minutes. And I can see exactly where it's been, and I know exactly how much it cost. I don't need to talk to anybody on the phone. I don't need to go through customer services. It just works.
Right.
And the technology itself is there. And so in that sense, yes, I think it's a threat. But I also think it's a huge opportunity. And somebody, probably of our generation in the future, will end up becoming a world leader or will be, the head of the FTC or something like that. And they will start to make these moves and they'll start to progress things forward, because I do think it's the way that the world will go. And it really would surprise me if in, my children's time, centralized currencies were still managed the way they are now. That would be surprising to me.
Yeah, I agree with you. And so do you think that, so maybe we'll still have centralized currencies, but they'll be in the form of CBDCs, central bank digital currencies?
Precisely.
Do you think that, so I know we also have the Fed digital dollar or whatever it's called now being worked on. And I think China's working on the digital yuan. And I think a lot of global governments are working on central bank digital currency.
Yeah.
So do you think that'll be like in 10 years from now, we won't be using paper dollars anymore? I mean, we in a way we're not really, because everything is done by credit transactions and everything's pretty electronic as it is.
Precisely.
So do you think in 10 years from now?
Sorry.
Yeah, go ahead. Yeah, in 10 years from now, we'll be using like a digital wallet issued by the Federal Reserve or by whatever central bank, like the European Central Bank or whatever central bank of the country you're residing in. Do you think that that's the future?
Exactly that will happen?
Yeah.
And I think this is for me one of the reasons that it's such an important evolution of the way the finances work, because very recently I lost my wallet. It's a pain in the ass. I lose all my cards, I lose all my cash that I had on me at the time, and I happened to be going from one country to another when it happened. And I ended up, right back in New York with no money. And what do I do then? Whereas if I have my own digital identity and maybe I don't know, some kind of wrist or bracelet or something, right, that shows me, okay, this is access to my money. It can be spent anonymously. That is going to be such a better system than a wallet that can get lost, or, going online and phoning a bank to deal with it. Yeah. Basically, yes, I completely agree with you. It's a pain in the ass, and I do not think it will continue to be the same way it is.
Yeah. No, I definitely think that's the way we're going. Anyway, let's actually go back to, I guess, your trading journey and I guess your current experience as a trader within this space. Now, I know you have a different full-time professional job, and I guess trading is more of a part-time thing for you. But can you tell us? Like, I know you first said that you found some YouTuber and that his whole strategy didn't work. What's your progress at now? How would you describe your trading? Like, what strategies do you use? Can you describe your methodology right now?
Sure. So, I mean, for me, the main things I look at, the first thing I would always teach anybody is risk management. So, whenever you're trading, you should trading no more than 2% of your account at the stop loss. So you have to set up your setup, you create a setup and you have your target, which should be at least 2 above your stop loss. And then you have a reasoned understanding of what will make that trade work. And you cannot ever, in my opinion at least, risk more than 2% of your total account on any single trade, because trading by its nature creates losing trades. If you expect to win every single trade you take, you're going to lose all your money. And every single set loss that you take should almost be like a badge of honor. It's like, okay, well, I took the trade, it didn't work, that's fine, hit the stop loss, but I controlled my risk. I controlled the amount that I lose. Because if you don't control your risk, then you're never going to make money. So yeah, anyway, in terms of setup, the first thing I look for is I trade reversal patterns. So I usually try to let assets establish a range. And then for me, I know you're not into Fibonacci's, but I think Fibonacci's work quite well. And generally speaking, they will, assets will create a range. And then if you look at the range, when the price is coming down and it's going towards a strong fib, like the golden pocket or the 786, I will put my stop around wherever 2% of the limit is under that Fibonacci, and I will let it trigger. But I won't pull the trigger when it hits it. I won't set up a conditional stop loss. I will watch the move as it's happening. And when you start to see a reversal, so it will go down. Usually it cuts through, say this is 786, it'll cut through the 786 and then it'll push back up. If it pushes back up and shows strength, then I will take the trade. And then maybe it bounces up, maybe it just blocks back down. If it drops down, I take the stop loss. That's fine. I let it go. Doesn't matter. It's a stop loss. And then if it goes back up to the top of the range, perfect. That's exactly what I want. And I'll usually take off around 50% when it hits the first level of resistance, and then put my stop loss to break entry and let it ride. For me, at least, my kind of primary focus is Fibonacci's, range trading, and always risk management. But I know you have many different strategies, and let's face it, are probably a more successful trader than me. So I feel like actually we should be listening to your wisdom in this one.
No, that's really interesting to hear more about the way you approach trading, because you said you take on more of a reversal strategy approach, and I do the complete opposite. I'm more of a trend following trader. So sometimes I'll take reversals depending on the setup, or if I'm like trying to hedge my like trend following strategy. But yeah, I don't really take reversals because I find that the real way you can make a profit in this market, not just crypto, but any kind of asset, like even the NASDAQ, or even if you're trading Forex or gold or whatever asset you're trading, is just capturing the trend, because that's where the big your biggest ROI winners are going to come from. And like trading reversals, that's just like, for me, it's kind of just short-term scalp movements, and you're really not going to hit any like big home runs or grand slams, which is what I'm looking to do. I want like the big winners, So it's funny. I remember a couple of months ago, we met up. We were talking about trading, and I showed you a chart of I forgot some crypto, and I said, "Would you go long or short here?" And I told you, I think I want to go long. And then you look at the chart and you tell me, "Oh no, it's at the top of its range. I'm going to go short." And then, you know what? I think you might have been right that time. So I think both strategies can work, both reversals and trend following strategies. It really depends on your perspectives and your style. So there's nothing wrong with a reversal strategy. I know plenty of successful traders that do reversal strategies. So I just find it easier to just try to capture a trending move and just ride it, rather than trying to use a reversal.
This is a very clear little range they got here. This is the absolute top of it. This is the absolute bottom. And then within it, you've got some quite nice, fairly clear areas of resistance. Maybe you take this down to here. And so if we were where we are right now, if you kind of really zoom in on this, I'm looking at this, right? And I'm thinking, okay, maybe I'd get rid of that one just for this day. Probably would look at the 4 hour then. You see, it's respecting these fib lines so nicely. Look at that. Yeah. It's beautiful. Nice. So as you're coming up here, I'd be watching this move and I would be seeing that. And then as it comes back down, that's when I'd take my position. And so where we got short, right? So I'd be putting here and I'd be putting this above the invalidation, and my total target would be down in here, right? So I would be taking this trade, looking at it. If it just breaks out, I would ignore it. I wouldn't take it at all. I'd just completely ignore the trade. But if it comes back down and bounces under, as it has done here, I'd be taking the position now. My total target would be down to here. I'd be taking off around 50% here, and I'd be putting my stop loss to break even. And then this, I just let it ride out. And so maybe if I'm lucky, the other 50%, maybe I take off another 25% here at the end of the range. And if it just completely breaks down, that's when I'd get my breakout trades. So that's what my breakouts would be. Whereas your breakouts are completely different, right? You'd look and you'd wait for it to bounce above. And then if it came down, bounced off, then you take the long. Is that correct?
Yeah, so actually right now I am long on Bitcoin, and you're probably looking short. But it's based on a daily time frame, actually 2-day time frame.
2 day. Interesting.
Yeah. So actually a 2-day is like a time frame not many people trade, but I find it very effective for especially for swing trading, for like more long-term trading. So is that's the 1 day you still have up.
This is the 1 day. Yeah, I don't actually even have the option.
Oh, I think you just add it manually. So if you go on the plus sign, you just have to type in 2 days.
Oh yeah. Cheers.
Not
that plus sign.
So under the time frames, so there should be like an option where you can. Oh, so go at the bottom, see where it says add.
Yeah. Here we go.
So now put like 2, and then put 2 days. Yeah, there you go.
See, now you guys all know who the real expert is. Oh, I can see what you're looking at there. Actually, that makes sense because you got this here, right?
Yeah. So it's a bit. I mean, it's not like breaking the range yet, but there is just a lot of. So I use a more of an indicator-based approach. So what my indicator was showing me is that we did break I believe the 21 EMA on the 2-day time frame, which would equate to the 55 on the daily. So that's like a very bullish sign for me. And there is like an influx of bullish momentum coming in. And we also, you can kind of see like we're kind of trying to put in perhaps like a higher low. And we haven't formed a higher high yet, but it kind of looks like there's like a bottoming formation almost. So while, to be honest, Bitcoin itself, it's not the most bullish asset right now. I think Ethereum, if you go to Ethereum, it actually looks much more bullish. And actually, I think Ethereum dominance like went through the roof the other day. So
I'll tell you what, do you want to start sharing yours instead? Because you.
But anyway, let's we can return to TradingView later.
Yeah.
All right. So let's go back to that's really cool to know like how you're approaching the market. So we just like using Fibonacci is your preferred. I guess your preferred.
And then the CVD as well for me, the cumulative volume delta. And there you have to be really careful about which exchange you use, because I'm going to just say it: Binance data is not clean. They put out false data, I think. But if you use Bybit, the data seems to be a little bit better and actually show. And then the idea for the trading style I use is that the cumulative volume delta will show you where the big market makers are going. And so when you start to see divergences between the price that is going and the limit orders that are being placed by the big traders, you'll start to see where the momentum is building up. So, if prices keeps pushing into a certain area and it's being absorbed by limit orders, it will show on the CVD. And it shows very clearly when you start to see the divergences. And then generally speaking, better to trade with the big traders than not.
That's really interesting because this metric, cumulative volume delta, I believe it's pretty unique to the cryptocurrency industry, because you can like track all of this on chain, whereas you couldn't necessarily get CVD data from trading the British pound versus the US dollar. So
or if you're on the NASDAQ or something, it's not happening.
So cool, man. So apart from Fibonacci levels and CVD, are there any other analysis techniques that you like to employ, or are those like the top two? And tell us, are there any techniques that you just despise? Like, I know you're not a fan of EMAs or moving averages.
I'm not a fan of EMAs. No, I think so. The way I look at it is that indicators work because everybody looks at them, but I don't think that they're a reliable source of information. And I think for me, at least, they almost always indicate something that is already happened, and in that sense, kind of not that helpful. So, but again, the thing that I would really stress is risk management, because inevitably you can lose. There's a wonderful video out there. It's by a guy called Lucky Chart Ape, and he talks just about risk management. And it's how somebody a trader turned, I think it was $9,000 into $7 million, trading stocks and using only breakout trades. And he won only 3 in every 10 trades that he took. But he did it through proper risk management, no more than 2% of his account every time. And he trades similar to you. He traded breakouts. And so he would constantly expect, okay, we're coming up. He would take a trade. It would bounce down. He would lose it. Lose. And then every, 3 out of every 10, they would actually break out and the stock would go and he would make nice amounts of money. And that to me, that really hit home, because if you don't have risk management, you're just not going to make money. It's for me, that's the most important thing.
Yeah.
So beyond any other techniques or anything like that, that's the only thing I would really stress, is just make sure you don't put on more than 2%. Yeah. It doesn't work.
No, I completely agree. Like for myself, I always use 1 to 2% risk per trade. Sometimes even only 0.5% risk.
Yeah.
If I'm trading like intraday and it's a very like volatile day, I'll use maybe just a 0.5% risk. So,
and I think that the other thing for me, at least, and this took me a while to get, is that when people talk about the 2% and the 1% and all this stuff, it's not that they mean you can put on, how to put it right? It's not that you can only put on 2% of your account. It's that the stop loss itself, when it gets hit, will be a 2% loss of the total. So if you have $5,000 in there, 2% is what, $100, right?
Right.
So when you hit that stop loss, you're going to lose $100. But you could potentially, if you have a tight stop loss, actually be placing, let's say, a third of your account on that trade. So it's not that you can't place trades that will win you significant amounts of money. It's just that you're controlling your risk so that when you hit, you're not going to lose more than 2%, the stop loss.
Yeah.
That took me a while to figure out. When I first heard it, it was like, oh, I can only bet essentially 2% of my account each time. But that's not the message. It's actually you're risking 2% when you hit the stop loss. That took me a long time to clarify.
I'm glad you bring that up, because I've been trading full time for 3.5 years and altogether probably over 5 years. So for me, it took a while to grasp this concept myself, that it's all about position sizing and what the distance to your stop loss is that really determines what your position size is. And because like you said, it doesn't necessarily mean that if you have a $5,000 account, you only risk, if you're using 1%, you only put $500 on a particular trade. Because if you're only putting, like, let's say $500 of your account on Bitcoin right now, it's like the volatility is very low, so it doesn't really make sense. So it all depends on what the distance is to your stop loss to determine your position sizing. So I guess for all the new traders out there, be sure to read up about position sizing and how your position size is related to not only your account balance, but also what the distance is to your stop. And there's a whole mathematical formula that you can go through to determine that. So I think that's a really good topic that you brought up. So my next question for you would be, so obviously you have a very prestigious full-time job. So how do you balance like trading crypto, which trades 24/7 with your professional life, where you have to, you have a very serious job and you have to focus on that. So how do you make time for both, trying to make some income from your crypto trading and also devoting your time to your your full-time professional job?
For me, it is a bit of a balancing act, and that's one of the reasons that I think, how to put it right, when you start off, especially in the first 2 months or something, you get this idea, oh, I just made, $1,000 or something trading. I'm going to quit my job. I'm going to go full time. I'm going to go hard. And for some people that works, and, power to them. But for me, at least, I needed the security of still having my full-time income so that I could mentally afford to risk a bit of cash on the market in trading. Because I was thinking to myself, well, you know what, even if I lose this money, it's not the end of the world because I still have my income coming in. So that gave me the security. that I could do it still. And the way that I manage it myself is through alerts. So I will be, on the charts, and I will be looking out at key areas, like as showed before, the 786, and the golden pocket, and I will set up alerts that will go off on TradingView, so that when a trade gets near to where I want, an asset gets near to the place that I want to place a trade, long or short, it will go off my phone. I will then know that I can, take the trade if I want to. Naturally, it means I sometimes lose trades, or I miss trades because I am in the office, or I'm, in a meeting or something like that. And also, inevitably, I'm in real life, I'm having coffee with my wife, or I'm watching a movie or something. So I'll miss those trades. And for me, I have to accept that. Now, each individual is going to have their own tolerance. But the idea that trading is part-time, or that it is something you can just do on the weekends, is not true. Everybody I know that trades doesn't have a life. They trade all the time. They are up, whenever the alarms go off, whenever the alerts go off, and they work harder than anybody bloody else I know, almost. Like you yourself, I know. I've been with you. We've been out having beer or something, and an alert goes off, and you're like, dude, just got to take this. And that's what it is. If you want to trade full time, that is your life. 4:00 in the morning, a price will go to a certain asset, a certain area. You will be up and you'll be taking that trade. For me, I don't do that. I'm not that committed. So I just accept that I'm going to miss those trades, and I, get the next one. The market's not going anywhere. But if you really want to do this full time, that is your life. You have to wake up for it.
No, I remember that. I think one of the last times we met up, I was like, we just met up. We haven't seen each other in a month, maybe. And like maybe like 15 minutes later, I'm like, all right, hold on, William. I gotta play some trades here because a lot of things are happening, and I had to get away. And I kind of felt bad. I'm like, God, I just met up with my.
Every time we seem to meet up, something seems to crash. Oh. There's always like alerts for both of us going off like crazy. Every time we meet up. So.
That's very true. So. All right, so next time we meet up, it might be very soon. Guys, be aware. Something will happen. I'll be sure to send you guys an alert on Twitter that me and William are meeting up, and there's going to be some big price action.
It will probably happen.
Yeah. So, William, do you ever see yourself perhaps ever doing trading full time, or do you think you'll do you see yourself going that way, or where do you see your trading journey going right now?
I think if I'm truly honest with myself, I love the idea of trading full time. I think it would actually be really fun because in many ways it is just you versus the world. You don't need a team. You don't need a business. All you need is a computer and a screen and some knowledge and some initial startup capital. So I love the idea of it. But if I'm really honest with myself, I don't think that I myself am mentally the right person to be a full-time trader, because you have to be so accepting of loss and so disciplined about your position sizing and about, accepting stop loss hits and stuff like that, that I don't know that I'm fully mentally strong enough. Like, I know you handle this stuff better than I do. Like, when I get 3 or 4 stops in a row, it gets to me. I'm not going to lie. Like my mind is like, oh man, I'm never going to win. I've lost so much money. It's like, and it gets into my soul. And so I know that I'm not mentally strong enough to be a full-time trader. And I think, especially when you're starting out, that's something that not many people really explain and talk about, is this psychology that you need. And you almost need to be robotic. You need to just, okay, I hit stop, whatever, and forget about it. And at the same time, when you win a trade, you need to not get excited. And you need to not start thinking, oh man, I am dialed in. I've got this. Because when you have that thought, you start thinking, you know what? I'm not going to risk 2% this time. I'm going to risk 5%. And that's when you stop. And that's when you get on tilt. And when you get on tilt, you blow your account up. So going full time for me, I know I'm not mentally strong enough. I would love to be. And I admire the people that are. But I would caution anybody to really look within yourself and see how mentally strong you are, because you will lose trades all the time and you have to accept it. And for me, I know I react badly to that. So
No, that's really.
What about yourself?
Really
I mean, you are a full-time trader, so I know the answer to that question.
No, but to be honest, man, I still it stings when I hit stop losses, and sometimes I have, even recently I had this week I had I had like 4 losing trades in a row, maybe even 5, just because in crypto we have these Bart Simpson patterns where price goes up, then it goes back down. It stops you out of all your positions, especially in this low liquidity environment we find ourselves in right now. So it stings a lot, and especially because I guess I have like over 100 investors now. So not only
186, right? Last time I checked. And I know I've been out with you when you have, I know you feel it when some of your copy traders have lost a few trades, especially because the part that hurts is when, say you've been on a 10 winning streak, and then naturally you're going to take a few losses after a winning streak of 10.
Of course, yeah.
And if you just happen to sign up just when you're about to hit those losses, it can, 2, 3, 4, 5, 6%. And that is bad. And I know you feel that because I've been with you when you felt it. But at the same time, it's a journey, trading is a journey, and it's about the statistical probabilities and having that edge. And if you just have that edge, that that every time I flip this coin, it's going to land 51% on heads and 49% on tails, you keep trading, you're going to make money. So long as you just have that 1% edge. And if you get a 2% or 3% edge, then you start really making money.
Yeah. And no, it's funny what you say about, or actually it's not funny what you say about my followers, or I want to call them, let's call them my investors. I think that, because that's what they are. They're my investors. There was one particular day in August when a pretty big, I guess, follower, or a client or investor, he basically dropped out of my copy trading because I hit some stop losses. And that was the day when we had, it was like the day before we had that big drop when Bitcoin went from 28,000 to like 25,000. And along with many other cryptos, we had like a 20%, like 15 to 20% down on most of the major cryptocurrencies. So on that particular day, I was positioned kind of more on the short side, but I did have some long positions just to hedge myself in case there was a short squeeze. So anyway, my long positions got all stopped out. And so I took maybe a 4% hit on my account that day. But for myself, I was fine with it because I knew now I have all these short positions. They haven't hit their take profits yet, but they're in the money. If the market continues to go down, I'm really going to profit from this movement. And so that's actually exactly what happened. A few days later, we had the big flush down, and literally my account doubled after, like, I went from 4% to like 10% on the month. But unfortunately,
he dropped.
Like 30 to 40 followers of my followers dropped out because they just couldn't handle that one bad day.
Yeah.
And then it's funny, I think they jumped back in, but then
they missed it.
that was like the big trending move. So naturally after that, all right, I'm going to take some natural loss again. So for any of my followers that are listening, guys, just stick to my strategy. I know what I'm doing. There's going to be periods of losses. That's normal. I didn't say I'm going to make money every day, but anyway, I don't want to make this about myself. It's about,
no, but you're right. Yeah. And this is the challenge, because it's not something people talk about much, in the trading community. It's this idea that everybody's so focused on how to trade and how to make money, but the psychology of it is really important. And even as an investor, I myself, as you know, I want to invest into one of your accounts and follow because I know you're good at it. I know you're actually quite a bit better than me in many respects, and you devote a lot more time to it than I do. So, anyway, the point is that I and any trader needs to accept that assets will go up and assets will go down. And it is quite hard to see, because if you've chucked in 10 grand or whatever it happens to be, and you're investing in somebody like that, and they lose 4%, that's a significant amount of money, and that's your money. But if they've made you 10% in the past, maybe you'll take it. But if you just happen to jump in at the losing point, it stings. It really does. And I've been there. There was if you don't mind, maybe we could talk a little bit about the crypto trading bots, because they're really starting to become a big thing. And so I used Bread Bytes for a while, and I was on, I think it was Shortbread, and I was looking at the historical data, And it had over 180 days or something made significant returns, like really, really nice returns on 5x leverage. And so I thought, you know what, I'm going to put some cash in. I put some cash in, paid the price, and I ended up about 3 days later, I was 3-4 trades up, and it made me $1,000+ just on a bot. And I was like, oh, great, this is amazing. This is some wonderful, perfect system. I'm never going to lose. So I put in more cash, and then guess what happened? It hit like a losing streak like no other. I think it lost 4, 5, 6 trades in a row, all at 5x, and it was brutal. I lost like $4,000 or something. It was killer. And naturally after that, I emotionally couldn't take the fact that this bot had just lost me so much money. So I pulled out and I thought, fuck this, I'm never doing it again. And I wasn't mentally strong enough. And because of that, the space becomes quite toxic sometimes, because people really focus a lot on the losses, and you feel the losses so much more than you feel the wins. So when I lost that money from the bot, it hurt me a lot more than the making of that money, because that money itself I'd actually made in DeFi, and I then transferred over and just thought, okay, well, I'll put this money to work here. It'll start making more money. And it's the idea of the money you've made then makes more money. It's going to be a beautiful system, and I'll be a millionaire in no time. It didn't work. So it felt like I'd taken a big step backwards, and it did. It's done. Anyway, I'm rambling, but the point really does remain that the trading psychology is huge, and the impact it has on you is big.
Of course. And so let me ask you this: when you do encounter losses that are, I guess, greater than average, or losses that particularly like hurt you emotionally, like what do you do to get over that loss? How do you handle that? Like, what do you do to overcome that?
I mean, back in the day, I was a little bit too into, when the pandemic happened, I was drinking a bit and stuff like that. And so I was like, okay.
We all were. Yeah.
Yeah, exactly. Right. Yeah. So that happened a few times. Then I kind of realized that was not the best coping method in the world. So I actually knocked the drinking on the head and don't drink anymore. Haven't done for a while, except for very special occasions. If it's my birthday or something, whatever. Right. But generally speaking, no. So that is how I coped with it then. Now I think I've become a bit better, and I live quite close. I live in New York, and so I will walk down to the river, clear my head, and think about the next thing to do and how to recover, and try and manage it more objectively than emotionally, because it's very, very easy to react emotionally to a big loss, and that will hurt you in the long run, because you'll make the wrong decision. You just will. Nobody makes the right decision after they've just lost a lot of money. It's just not how humans work.
And I also want to ask you, what do your family and friends think of I guess your trading pursuits? I know, some people within my family, maybe my social circle, they think what I'm doing is very risky and I should find something more stable. Do you find that people around you say the same things, or are they more supportive of your, of your passion for trading?
So people around me, my mom, my wife, and my family, they trust me and they support my decisions, but they don't understand it. And I think this is the other challenge that crypto really faces, is this perception problem. You kind of touched a little bit about it at the start, that it has this perception of being risky and being full of scams and basically a place where you lose a lot of money. And so when bad things happen, so let's put it this way, right? If you're involved in the crypto space, you live it. It's part of your life. The good news, the bad news, it's part of what happens every day. But if you're not in the crypto space, it's only when things like FTX collapses or when there's a big scam that happens that you hear about it. And because of the way the news cycle works, not just in the US, but across the world, that inevitably means that you only ever hear the bad news. Because you only hear the bad news, you get a bad impression of it. And I'm very fortunate because my family is supportive and they trust my judgment. But at the same time, inevitably, there is sometimes a bit of resistance because the primary thing that they hear about is the bad news, and that is the problem the space faces. I think, the perception problem, because it's just seen that way. What about yourself? I mean, how does your partner react?
No, I mean, she's been supportive ever since the start. Obviously, there's some times where, as you've seen, I have to like get away to TradingView and kind of be very distracted at times, especially during the daily close, which always happens around dinner time for us in this time zone. So, but no, you know, she's very supportive of it, and she's I guess an angel for sticking with me for this long. Since I mean, I've been doing this since 2020 full time, but even before then, this was what I was doing outside of work or even at work. But it doesn't matter now because I'm not with my previous employer anymore. So it's all good. But William, man, we've been going for close to an hour, and actually there were like a ton of questions I wanted to ask about the DeFi space, which is what you're very knowledgeable about. But I don't think we'll have enough time because I think we should leave this for another segment, perhaps, if you'd be interested in coming on. But we have like maybe 5 minutes left, and I wanted to end this with just some fun questions. So nothing serious.
Let's go for it.
Yeah. All right. So I need a quick answer. So question number 1, Bitcoin or Ethereum?
Ethereum.
Okay. Dogecoin or Pepe?
Neither.
All right, Dogecoin or Shiba Inu?
Both crap.
All right. What would you say?
Not into meme coins. It's just not my thing.
Yeah. What is your favorite trading movie or book?
Movie? Probably The Big Short.
The Big Short. Yeah.
Yeah. I mean, that's great.
That's one of my favorites as well. And then what else did I want to ask you? Batman or Superman?
Oh, Batman.
Batman.
Definitely. I mean, come on. Superman's he's so easy for him.
Batman or the Joker?
Oh. Well, which Joker? Because Heath Ledger's Joker, I mean, that's a good Joker.
Here's a better question. All right. Joaquin Phoenix Joker or Heath Ledger Joker?
Ooh. Honestly, probably Joaquin Phoenix. Yeah. Just edges it. But I mean, they're both fantastic. Yeah.
Yeah, I agree. And I think there's a Joker 2 coming out with
Who is there? I didn't know that.
No, it's gonna be with like his partner. What's her name?
I don't know, to be honest with you.
Yeah, I'm not too familiar with the whole comic book world. Yeah. So that's all right. And then my last question is, who is like one of your, I guess, favorite trading influencers or trading like guides who you really follow and who you would recommend to other people?
I mean, apart from yourself, I do, which definitely I would recommend without a shadow of a doubt. I mean, I follow you myself. So apart from you, I think Lucky Chartape is legitimately good at trading and knows exactly what he's talking about. He's on X or Twitter, whatever you want to call it. Beyond that, to be honest with you, I think the vast majority of them are kind of crap. I think, there's a lot of Bitcoin moon boys and a lot of people that just go for engagement on CT, and they're not really good at what they do. They just go for engagement. In terms of books, there is a book, Mark Douglas, Trading in the Range, and the other one, I think I gave it to you the other day.
Is it called Trading? Is it Trading in the Zone or Trading in the Range?
Yeah, Trading in the Zone, which is good. Yeah. And then there's Trading the Range, and that is
really interesting.
Let me see. I've got it somewhere. But yeah, that book, like basically, it teaches you about market structure and how the markets actually work and how. Anyway, read it. It's absolutely fantastic. Oh, the other guy, Bitcoin Trading Challenge. What's his name? Yeah, he's really good. He's really good.
Yeah.
So Lucky Chartape, yourself, Bitcoin Trading Challenge. Those are my 3, and I wouldn't really recommend anybody else. I think most of them kind of don't know what
Yeah.
they're talking about.
I agree with you as a person who was trying to seek like good educational material, especially when it comes to crypto trading. There's a lot of crap out there.
Yeah.
So it's very important to filter out the good education from the bad, which I think is like a whole nother step in your journey. So, or in the trader's journey. So William, we're approaching the hour mark here. Is there anything you'd like to plug here? Anywhere people can find you? I do believe you have a game coming out. Would you like to talk about? Would you like to talk about that?
I mean, I've got a Kickstarter right now where I created a new game called Unicorn Poop. Where is it? Let me get a copy. Sorry.
Yeah.
Fantastic fun. It's a card game. It's based on a game called Palace and Shithead. You adapt it to that. They've added some new cards and some new rules. It's very cute and it's just a bit of fun. Like, you can find it on Kickstarter. I'll give you a link if you want. There's also a website. It's not in full release yet, but it will be soon. And it is honestly fantastic fun. Like,
awesome.
Yeah.
Yeah,
we'll play it next time.
Yeah, we'll play it next time we hang out for sure. Yeah, William, thank you so much for your time, man. It's been a wonderful conversation. I think it's been highly entertaining. I mean, we've talked about everything from FTX to Sam Bankman-Fried to regulations to trading strategies, trading psychology. I think it's been a very informative talk. And like I said, we still didn't get to all the DeFi stuff that you wanted to talk about. That I wanted to ask you about. So, maybe we'll definitely have you on future segments of this podcast on TradeDelicious.
Fantastic.
Yeah. So thanks guys for tuning in. We hope you found this informative. Don't forget to like, subscribe, and hit the notification bells and all that good stuff.
Yeah.
All right, guys. Thanks again for tuning in, and we'll see you guys next time.
Bye-bye.
Hey guys, Jordan here. Just wanted to send you a personal little thank you for sticking around and watching us here at TradeDelicious. If you did enjoy the content, consider subscribing. Everything we do here is completely free. And of course, we have some other video suggestions here which you might love. We will see you in the next video.